Natural gas prices are up a lot in the last 12 months here in the United States, and it's not just here. It's also in the United Kingdom and in the European Union, where there are fears of potential shortages and rapidly rising natural gas prices. These are some of the highest natural gas prices on record. There was a recent article out about how the exports of liquefied natural gas are being diverted to Asia because of potentially cold weather, and how the United Kingdom and Europe are not getting the natural gas and LNG supply that they need to help keep prices down. But there are also supply issues, and a lot of this is because this enormous amount of shale gas byproduct that was being flared off every year since 2008 in the shale oil bubble, that shale gas byproduct, because there was nowhere to store the natural gas, because the US does not do infrastructure correctly, that byproduct, that extra supply is gone. And as you can see there with the chart on the right-hand side of your screen, the rig count, while it has risen here in the US, it is still down a lot compared to past levels over the years with the shale oil bubble. And a lot of the shale oil production, which produced an insane amount of shale natural gas that was flared off. There was so much shale gas flared off that people could see the fires from space. That's how much natural gas since 2008 has been wasted here in the United States because of the shale oil bubble, and because the money for infrastructure was not spent properly on natural gas storage tanks. There are legitimate supply problems here, but the natural gas chart here in the United States, I put the 1-year natural gas chart in the middle of your screen. The natural gas price has rallied enormously lately. And there was also a Bloomberg article recently in the last 10 days that a higher natural gas price is now going to cause even more stagflation, even higher cost of goods sold into many different global supply chains on a lot of different things besides just electricity, also food creation, sugar prices, a lot of other things that you would not expect. So a higher natural gas price is going to cause a lot more stagflation and shrinkflation and higher cost of goods sold in global supply chains, while these deflationistas that just point to the velocity of money chart here in the United States, these lazy deflationistas that are global macro bond fund managers gambling with other people's money on their leveraged bond trades, ignore a lot of the facts and data that's proving that higher costs are still going into supply chains, despite what these phony inflation statistics are saying here in the United States, with how the changing propaganda index is now dropping a little bit. I think it dropped a little bit below expectations on Tuesday's numbers. So if you want to read more about this, I will attach a Bloomberg article about higher natural gas prices reverberating throughout cost of goods sold and global supply chains, affecting prices besides just higher electricity, in the information and description section. Also about how there's natural gas supply problems in Europe because a lot of the LNG supply is being diverted to Asia, although I think it is not nearly enough. China is still using way too much coal-fired energy for their coal-fired power plants. They are still building coal-fired power plants. If China, which is the world's largest polluter, if they actually cared about the environment, they would have already switched from using coal at these power plants to natural gas. It is way cleaner burning. The US has already switched almost all of their electricity generation power plants over to cleaner burning natural gas, and that is because we have the supply here, so it's easier to move it with the pipeline. But overall, I think natural gas does have a bright future. I was actually more bullish on natural gas over the last 12 to 18 months because of how much shale oil production had come offline and how much shale byproduct was being shut down than I was even on oil. And natural gas is used in so many things nowadays. It is also cleaner burning and more friendly for the environment. And over the last, I would say, 18 months, there's actually been a lot of acquisitions by a lot of the larger oil companies, and most of the acquisitions have actually not been towards oil. They've been towards natural gas. So Chevron and Pioneer Natural Resources and Devon Energy and ConocoPhillips and some of these other larger oil companies, there's only been about half a dozen major acquisitions in the oil and gas space over the last 12 to 18 months. The majority of the assets purchased were actually natural gas for a bunch of different reasons. One of them is cleaner burning, so more friendly for the environment. The other is a lot of oil and energy experts are actually more long-term bullish on the natural gas price than they are on the oil price, as politicians and bureaucrats try to shift a lot of the demand side of the equation away from oil. But I don't think that they can do the same thing for natural gas, as it is used in so many different things compared to just oil, which is used for transportation fuels. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall, exclusive for my patrons, all for the cost of a Starbucks cup of coffee, only $5 a month for premium content. There is a lot of research behind the paywall, including 29 new articles out in the last 13 or so weeks on a lot of interesting topics about global macro companies and sectors. There is a uranium article out in the last 10 or so days. Also, a lot of in-depth articles about gold mining companies, which companies are raising their dividends. And despite the paper price of gold in US dollars not doing anything, these companies are literally minting a lot of money with free cash flow and increasing dividends. They're also probably going to go on the mergers and acquisition spree. We have the Denver Gold Forum, which is this week, so expect a lot of deal flow coming out in the next couple months, 6 months tops, because of how attractive the valuations are for discounted cash flows for a lot of these producing gold miners. So you're going to see the more well-run, larger producing gold miners swallow up the smaller mid-tier and junior gold mining producers because of how discounted the cash flows are, how discounted the asset valuations are. It is much, much cheaper to go and buy a producing gold mine rather than to build a gold mine from scratch. So if I could wrap up the short little video very quickly, there are major supply problems in natural gas. Some supply will come back online. However, as you can see with the chart there on the right-hand side of your screen, the rig count for all this shale gas byproduct is nowhere near the high levels that it was even 5 or 6 years ago. We are nowhere near those levels. So it will take some time for new natural gas supply to come back online. And that will open up investment opportunities for natural gas investors over the next 12, 18, 24 months. There should be a nice little runway here before more natural gas supply is back online. But this is going to put a lot more cost pressure into global supply chains. This will help cause higher cost of goods sold in many supply chains and goods. Besides just transportation costs, this will also put a lot more stagflation and shrinkflation into global supply chains. And this is something that the deflationistas are, of course, ignoring.